John, can you hear us?
Where are you?
What'd you say, John? Yeah. All right. Did he answer? You're muted, John. If you can hear us, this one, make sure you can hear us. If you just unmute for a second, let me know you hear and see us. Yeah, it's on. It's green. John, can you hear us? You put up a thumbs up. Is that a thumbs up?
Where are we?
Let me text him.
Where are we not? No. No. No.
John?
Or.
I know, he keeps muting off and on. He needs an assistant.
Host.
I tell him I can hear him.
Let's see. What am I not doing?
We can hear you now. Can you hear us?
Video.
He's off again. There he is.
Yeah.
That's on a delay.
Get me.
Yeah. He's texting me something. Are your speakers on? Yeah. I'm back out and reconnect. Okay.
Can you hear me now?
Yes. Yes, I can hear you, John. Can you hear us? Yes, hear you and see you.
For whatever reason, I cannot hear you guys. Select microphone and turn mic. Speaker. Speaker.
He did it twice. Yeah. Yeah. Okay. Do we have a number? Will he be able to hear everything on my cell phone?
That's me. For some reason, I cannot hear you guys. I can't figure it out.
Dial where? To the Zoom? Yeah.
Hmm. Come on.
He's typing his own. He said okay. He's going to dial in on his phone. Hello,
Steve?
John. I can hear you.
Right.
Right.
Can you hear us?
I can hear
I
you.
can hear you, but I do not have a video now. But
Good.
I'm good.
Okay. All right. Well, at least you can hear us.
Amen to
Amen
that.
to that.
All right. So, present via Zoom audio is Trustee Rooney, myself, Chairman Jeffrey Doherty, and Trustee Thomas Thompson. Trustee Shannon Farmer will be joining as soon as she's available. I'd like to call to order the July 22nd, 2024 Upper Darby Police Pension Fund Board of Trustees meeting. First order of business is the investment reports. Mr. Glocken.
Well, thank you and welcome. 2024 has looked almost like 2023, almost identical. You have the same 7 to 8 stocks are responsible for most of the return. If you turn to page 12 of the performance report, we'll go through the summary. On page 12, if you look at the middle column year to date, you'll see the Upper Darby Police Pension Plan is up 6.94% so far year to date. Bond market is down 0.75%, the bond market benchmark, and the total stock market is up around 11.31% so far for the year. The most important decision that we've made dating back not only for this year, but last year and since inception dating back to 2011 was when we first came in the beginning of the year with our asset market assumptions. We recommended to still wait 10% more towards equities to try to have a more likelihood of hitting your assumed interest rate. So given that stocks are up 11.3, bonds are down 0.75, that additional 10% towards equities was the most important decision that we made. Few things that have hurt the actual performance so far year to date, but eventually will look smart. I just can't tell you when. Is that at the beginning of January, we sold large cap growth and bought large cap value. We also had a overweighting to small cap because both of those were so underweighted. And since if you're over almost 2 decades, what we've been doing is rebalancing. So we're constantly buying the asset class that goes on sale. That's what's always led to your overperformance over the long run. So far this year, it's led to underperformance compared to the benchmark. But already, so far, small cap stocks so far, this just within July, have earned about 4.68% just in a few days. So like I said, eventually we're going to benefit from buying the asset classes low and rebalancing. Your since inception return is 7.7. That's pretty high compared to the blended benchmark of 7.34. You're almost over 30 some basis points net all fees to the blended benchmark. Remember, that's the blended benchmark of 70% equities, 30% fixed income. Most pension plans are much more conservative, so their benchmark performance has been much lower. So far in the second quarter, your performance for the police pension plan has been up 1.33. The bond market has been flat, and stocks have been up about 2.85%. Your stock portfolio so far in the second quarter was up 1.82. Your bond performance up 0.21. So the main drag has been on the equity side due to large cap value, small cap stocks, and mid cap stocks are the drag since large cap growth has done so well. In fact, if you turn to page, I'm going to have you turn to page 7. page 7 of the report, you'll see small cap stocks were down 6.49, mid cap stocks were down 4.95, value stocks were down 1.14. If you go to the previous page, page 6, you'll see foreign stocks were up 0.77, so one of the leading asset classes, but large cap growth still up 9.57% in the second quarter. So almost all the returns in the equity market have come from large cap growth stocks, your technology stocks. We believe that's going to change and turn. So you'll see large cap value, small cap stocks, and mid cap stocks start to be the leader. Again, it just takes time. So what we've benefited from all the time in the Upper Darby Police Pension is buying on sale. So eventually, like I said, eventually we'll look smart. I just can't tell you exactly when. So the biggest thing that's led to higher performance than most pension plans across the country is that weighting the 10% more to equities, because only about 5% of pension plans across the country have a 70% allocation to equities. So that was the smartest thing that we've done. That was worth the most and will be worth the most, is concentrating on the allocation. Your valuation coming up this time next year will be one of the most important meetings in a while, because your valuation will count 2023 and 2024's performance. If you go back to page 12, you'll see that in 2023, you're up 16.87%. That was also due to having a weighting more towards equities, so that also was relatively high. When you squish the 16.87 and the 6.94% where you are so far year to date this year, you're well above your 7.25 per year, which would be 14.5. You made your 14.5% in 1 year last year. So at least on the investment performance side, that will definitely help in the valuation. Although we are using asset smoothing, but this time next year, we'll be able to see the impact of 2 years of high performance, as long as I just didn't jinx us. So we're recommending to stay the course. We will take a look at the capital market assumptions at the beginning of January of next year, where we then make our recommendation on how to allocate. On the bond side, bonds have been rather flat. The biggest question has been, why do you own bonds when over the last 2 years, they've been flat? Last year, you saw all the bond market performance in like 3 or 4 days, and then it jumped in September, making bonds much more attractive than cash. This year, it was thought that the Federal Reserve would lower rates 6 times in the beginning of the year. Now it's down to maybe 1 sometime after the election. Go ahead.
Just one time?
Maybe 2, but it's looking like, if you take a look at the futures in the markets, it's showing that you probably expect 1 decrease. When interest rates decrease, then you're going to see those bonds go up. So there was a question last quarter about, investing in bonds and why hold bonds. You potentially, bonds are so undervalued that if interest rates come down 1%, you could see like a 10 to 12% uptick in bonds. If you saw a 1% upturn in interest rates, you would only see about a 2 to 3% loss. So that shows you how undervalued, Jeff, bonds are, which is why you want to continue to own them in a pension plan. What you don't want to do is what you're seeing. Most retail investors are moving out of bonds and going to cash, because you still have an attractive 5% return. Well, eventually they're going to miss out on the bond market going up. Eventually, you will see also small cap stocks have already started to run. They haven't run as much as growth stocks, but eventually it does. We take out, and our process is so efficient, we take out human nature. We're always buying what goes on sale, and eventually we're going to benefit from it. That's why you've had better than benchmark performance since inception. And again, that benchmark's 70% equities, 30% bonds, when most pension plans are more right now. They went reverse. They did not expect to see the same returns out of equities, so they went more conservative overall. We did not. We did not. Now, we'll come back to you in January of next year. Will be another important meeting where we lay out the capital market assumptions. We're starting to actually expect to get a higher return for bonds. Therefore, we'll be able to take less risk and get a higher return, looking out after January 1st of next year. So the economy's still relatively strong. The job market's still relatively strong. Inflation seems to be coming in. You still have some of those potential, risk volatility with the election. And elections usually do cause market volatility, but they don't cause market downturns. If you take a look at the last time Trump won and ran and won, small cap stocks escalated. In fact, there was like 1,000-point swing on the market. First opened up down and then it went up. There was about 1,000-point swing, and small company stocks benefited the most. So, and it doesn't matter, Republican or Democrat, since we own everything in the all market indexed approach, we're going to take advantage of whatever goes up and down. So when you see market volatility, that's going to help the performance in the pension plan over the long haul. It can hurt things over the short haul because you're selling something high and buying something low. And what's happened over the last 2 years is you saw large cap growth run for 2 years. But in 2022, if you remember, we sold large cap value because 2022 large cap value did the best, and we bought large cap growth, and they ran for 2 years. So eventually, we're taking human nature out of it. We're always going to buy on sale. We might have a bias towards something that's very, very undervalued, like small company stocks are extremely undervalued right now, compared to large cap growth, like your technology stocks that have been for most of the market growth over the last 2 years. So we're going to stay the course. In fact, we're going to stay the course legitimately. We're going to keep the portfolio intact. And this quarter, we just sold large cap growth and bought large cap value at a discount. And large cap growth so far in the third quarter, it's only been a few weeks, but it's in negative territory, and value and small cap stocks are up. Any questions on the process or where we are?
No, I had one, I think you addressed it though. A retired member brought up that we may live to see bonds come back, and you addressed that is happening.
Probably this is the best environment we've seen for bonds in over 30 years.
Mm-hmm.
They're so undervalued that the upside is much greater than the downside. And even the stock market, remember, the economy and the stock market are never really directly correlated. And for the most part, you could see equities run when people are when they're feeling the scariest. And that's what you're seeing now. And you benefited, if you look since inception, the bond market's been at 1.85%, the stock market's been at 8.96%, and you've weighted 10% more to equity. So you've had about a 90 basis point swing just from that one decision. We greatly appreciate the opportunity. If there are any questions, please let us know.
Thank you, Mike. You good, John?
Yes, I did.
Let's see. Actuary report. Dave? Mr. Dave Reed? Thank you.
Okay. Just a short little bit of information tonight on something that was recently enacted into law was 2024-49. So that is coming out of Senate Bill 464, and it was just signed by the governor on July 8th. And what that does is it allows a municipality, it doesn't require, it allows you to amend your police pension plan to allow for service with another agency to be purchased the same way military service is purchased for, before you become a cop. So if an officer goes from one agency to another, it doesn't have to be, or there's no language that says it has to be within the state of Pennsylvania. You can purchase up to 5 years of service as long as you're vested where you are now. So you got to have your 12 years. And the service that you're purchasing isn't already being used for a pension somewhere else. Those are the high level facts. It's calculated the exact same way that military service is purchased. Remember, that's non-intervening service, so that would be service before you even joined an agency, not if it's, reserve duty or anything like that doesn't count because you're getting service, you're getting credit for that time if you're gone anyway. And like I said, so the interesting thing is if an officer does have military service that they purchased and they want to do another agency, to do combined can't exceed 5 years. So you're limited to 5 years of purchase either way. On the next page, page 3, like I said, the formula is the same way military service works. So you would look at the most recent valuation, which is every odd year. So in 2023, you have all of your active officers, they have what's going to be earned in the year. That's called normal cost. And that's a percentage of payroll. So what you do is you take the officer's first 3 years of service and average that compensation, apply that normal cost percentage, but it can't be more than 10%. So like, we'll get into what this plan is in a minute. So 10% of that 3-year average multiplied by the number of full and partial years that want to purchase. Then you roll that up with interest from the date they entered the plan until the date they're going to write the check to pay it off at 4 3/4%. It's relatively simple to compute. On the next page, page 4, is where you get into some of the things that this law doesn't say. Remember that it's optional, so this has to be bargained for. It's being added to a plan. There's going to be a cost to the plan, which requires a study before you can do it. You have to do a cost study to kind of estimate what the impact of the plan is going to be. I mentioned that the cost to the officer, that normal cost percentage is capped at 10%. The normal cost percentage as of 1/1/23 in this plan was 25.36%. So that additional 15% of pay essentially is going to be borne by the township. It's going to flow through the MMO. That's why you need to have a cost study performed. What the act does not do is doesn't specify where that service has to come from. It presumably could come from anywhere where that person served as an officer. No language as to how, if that officer was part-time at another agency before they joined, how you treat that. So is a year, is part-time counted as something other than that? You'd have to kind of spell that out in your negotiations, how you're going to treat part-time service. There's also no language of what an officer has to provide as far as proof of what their employment was at another agency. So you're going to need to, if you want to do this, which I think a lot of agencies will as an attraction and retention tool, I think once some get on board, it's going to kind of be, everybody's going to want to do this so that, otherwise no one's going to leave somewhere else and come here if you need an officer.
Until they get the price.
Yeah, well, yeah, that's up to them if they want to pay for it or not. The other thing is, keep in mind, for some of you that have been around a long time, if you go back to like pre-96, the contributions that you made to the plan were post-tax. And since then, they've been on a pre-tax basis, come out of your payroll before you pay taxes on them. And when you retire and receive a monthly pension, that's factored in. Any post-tax contributions means you don't pay tax on a portion of your pension benefit. You're going to need to track how the officer pays for their pension. So if they write a check out of their bank account, that's post-tax dollars. You're going to need to track that separately and apply the same math when they retire to know that a portion of their pension check is non-taxable. And if they decide to pay for it out of like a 457 plan, where those are pre-tax dollars, you're going to want to treat it the same way you're treating contributions now. Those are all on a pre-tax basis. So there's no language in there. You're not going to find it. You're not going to be given easy instructions on what to do. Some of the administrative things that you have to factor in are what we should be careful about when we do it. If it goes into the plan, that's fine, but let's make sure we do everything correctly from the start, because undoing it all and trying to fix mistakes is tougher than doing it right the first time. And what we don't know is if this does come into play, you may know of some officers that came from somewhere else and they may be close to retirement, and then this gets signed in and all of a sudden you've got a spot to fill because somebody's ready to go. So we don't know what that's going to do to retirement patterns. Something to think about when you and the superiors as their workforce planning, trying to fill spots or keep spots filled. This may impact that in the shorter term. But again, someone has to have left before they were vested. Or they have to have, if they, let's say they had 15 years, they have to have said, I don't want my pension, I'll take my contributions out. So if they're vested and they're using that service for something else, they can't buy it. And they have to be here at least 12 years before they can buy it anyway. So you should have a decent heads up.
Okay. Is this something that should be covered with the CBA between the
Yeah,
union and the town?
It's going to have to be added to the plan, which means it's, your whole plan is bargained. So
Okay.
It's not a given.
So
We've
that's to
already had-
negotiate with the township.
Yeah, I already had one other agency who said, hey, officer heard about this and wants to buy some service. What do we do? I said, you have to wait till the next round of negotiations. So if you just signed the contract, it's gonna be a couple years before you can add it.
Gotcha.
It's pre-open.
And the price of that, will that be negotiated between the union and the town, or is that already set?
Well, the math is the math.
Yeah.
Okay.
So
Would it
you
already?
can't charge him more.
Than
You
we
can't charge
pay?
an officer more than what this says. So you have to be willing, you have to know what the cost is to the plan, and it's really on an officer by officer basis.
Ah.
You know, how much, what their compensation was at the beginning of their service, the first 3 years, how far into their service they are, because remember, once you do the math, you're rolling it forward with interest from the day they entered until the day they're gonna write the check. So if they've been here for 20 years, it's gonna be a pretty large number,
Yeah.
but it might be worth it to them if they can buy up to 5 years
Right.
and retire 5 years earlier than they otherwise would have. You know, you have to talk to a professional.
Yeah, it sounds complex. Okay.
Any other questions from anyone else on that? I know it's new stuff, just came out.
Jones? No?
So we expect a lot of questions to come out. You know, that email that I got about one officer wanting something, that's just the start.
Yeah.
It's coming.
Yeah, we kind of knew this was coming, so everybody's been anticipating it.
I don't think it'll clobber us when they see the price. I think you might get some interest, but I don't think we'll hemorrhage personnel because of it.
Yeah.
Yeah. Because of the cost. I
Right.
mean, it's a nice deal, but it's expensive.
Yeah.
You know?
Most of the police officers we see doing it, Jeff, on the military, it's the same as the military buyback,
Right.
are taking it from the 457.
Oh, okay. So using that money, okay. That would make sense. That money's gotta come from somewhere.
That's all I have.
Okay.
Thank you, dude.
Thank you.
All right, thank you. Authorization for the following. Payment to CBIZ INR for the 2023 GASB 6768 actuarial report, annual pension benefits. They are now complete and delivered. Review AG 385 and death benefit calculations for the amount of $3,240.95. Payment to, should I get an approval for each one, I guess? Motion to pay that bill.
So moved.
All those in favor of paying that, say aye.
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 Ayes have it. Payment to Cozen O'Connor, Robert Kaplan for professional services attorney fees for the second quarter, April 1st through June 30th, in the amount of $980. Motion, please.
So moved.
All those in favor, say aye.
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 Ayes have it. Payment to Carrie M. Gavin for secretarial services for the third quarter of 2024 for $350. Motion, please.
So moved.
All those in favor, say aye.
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 Ayes have it. Moving on to, and is that, are we up to date now with our bills? Okay. How about you? Are we up to date with you? Okay. Hey, good. So acknowledgements, drop retirement for Captain Anthony Vaughn. It says effective 28/2024. He had already been in drop. He is leaving early, so he's a normal retirement effective June 28th, 2024, even though he was in the drop.
Goofy.
He's our first person out on that.
He didn't intend on leaving, but another position came up
Yeah.
somewhere.
He's accepted another
Hard to turn down, so.
position. So he didn't complete, he was in drop, but he didn't complete it fully. But he's a normal retirement, right? Is that the right way, language? Yeah, okay,
Yes.
correct. Correct,
Right.
okay. I just want to make sure we're acknowledging it correctly. All right. Drop retirement for Jeffrey Doherty, myself, effective May 18th, 2024. I'm entering the drop. I am intending to stay until May 18th, 2026. So, yeah. I am in as effective May 18th of this year.
We'll see about that. That's got to get voted on.
Does that need a vote? Does that need a vote?
No.
No, okay. I wouldn't do anything wrong. Hey, you want to keep me? Yeah. Thank you. The resignation of Officer Elijah Brown will take effect on September 12th of this year. He has tendered his resignation in writing to the superintendent to accept employment with another law enforcement agency. That is acknowledged. So, is there any, not for executive session, any new business? Any old business? And I think the two things, the big issues we need to discuss, we need to turn off. Let me conclude the meeting officially. And John, can you hang on, please, for the executive?
Sure.
All right. So, motion to adjourn our meeting for July 22nd. Motion.
So moved.
All those in favor say aye.
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 The meeting is adjourned. If we could turn off YouTube, we'll move into executive. We'd invite the CAO to please stay for the meeting.
You still there?